Hey everyone, John Henry here, Slingshot Futures Trading Group, SSFTG. Welcome to the video. In this one, we're going to be talking about something that's incredibly important when it comes to the markets, and that's staying adaptable in the markets. And really, when it comes to trading, one of the best tools that we have in our repertoire is the ability to be versatile. Markets change several times through the course of the day in how they move. And we have to be able to move with them. Trading a range as though it were a trend is a surefire way to have a very bad day, as an example. So how do we stay adaptable to the markets in what they're telling us? So first off, we have to understand what the market is and isn't doing. For that, we kind of have to have context, and really the only way that we can build context is to start out on the chart and work our way forward to understand what is going on up to now. Think of it as a catch-up before the sequel begins. We need to understand what has happened to understand what may happen next. So when the market is doing what is expected, then our anticipations should be, well, the market's doing what we expect it to do, so we anticipate that it keeps doing what we expect it to do. But there are going to be those times where it does something unexpected, and we have to shift our mentality a little bit with this new information. An example, if I were looking for an L2 to hold in terms of let's say a long, because the market's going up right now, and the market goes down to an L3. That may be a clue that there is some trouble brewing. That doesn't mean that the trade is bad and that I need to completely give up on it, but that does mean that I have to be a bit concerned in terms of what's going on. So building the context, starting from the left side of the screen and working our way to the right. One of my favorite things to do first off is see where have we gone. This is the first candle open, and this is where we are now. For the most part, the market tried going down, but in the end is still going up. And from technically the left to the right side of the screen, it's going up. It's not doing it by much, but it is going up. So in terms of the context, then, we have to assume that there is an overall bullish trend going on here when we're approaching it as of right now. Because remember, we're trying to figure out what's going on and get the context up to this point in time to kind of give us an idea of what the story is. So very obviously, the market reversed aggressively off of the lows. So when it was reversing off of the lows, at the time, remember, bears were looking for this to continue lower. Nice push to the downside. The bulls failed. Tried again. The bulls tried one more time, and they completely gave up. The sellers have every reason to believe that this is going to continue to the downside. But eventually, as with every trend, it's going to stop. Right? It's going to turn around and start working in the other direction. So what I'm looking for is narrowing in where that actually takes place and where to adapt to when the market is told that something's wrong. So if we just start from the left side of the screen and work our way to the right, initially the market was working our way down, and I want to see what were the clues in terms of what was happening here. So if we're looking at this to the drive to the downside, we can see that we have an L5, which holds before finally breaking down to a new low. And typically, after an L5, we should see a response off of an L2. And they did. So perfect response off of an L2 right back down to the downside. Now from here, this is where things open up a little bit, because that L5 to L2 rotation, that kind of is the end of the short-term story, unless they're looking to continue this down in an L1 trend. And we can see that they are trying to continue it to the L1 trend downside, and they're holding it beautifully. But notice what missed. The market could not make a new low after that L1 held. And after the L1 did make it down to the low closes but could not break a new low, it reversed back up. And when it reverses back up, notice how the market responds to these areas. Now the market's trying to push down, but it's being treated as support. It's almost as if all of the shorts who were short here are starting to jump ship on the remainder. So something is telling us as soon as we got this L1 to not go down to a new low, something's wrong. Maybe the market's trying to go back and repeat an L2 because that's what happened before. And we can see that some sellers tried. But when it starts breaking above that, it's kind of all hope is lost to the downside. That's what they were supposed to do. It doesn't mean that the market has to do this. In this case, it did. But what it means is that I need to adjust my expectations in what I'm looking for. Because right here, this failure to continue the trend, that's a huge red flag to tell us, wait a minute, you might want to back up a second and take a reevaluate this location. And instead of continuing to go short into that non-perfect type of context, that could even offer up a possibility for you to look in the opposite direction. And here we have an L5, which rotates up into an L3. That is atypical, so we need a little bit more info. It rolls up from an L3 into an L1. Now we're back on track. So we continue along with the trend. Another L1, the next L1 is likely going to be the next hold. They hold from there. So instead of sticking with the short side when you realize something is wrong, cut the trade and possibly open yourself up to the opposite side of things to really just open the door to both sides and stay adaptable to what the market is telling you. And one of the biggest clues, almost every single time there is a shift in the market, when things adjust and you have to adapt to those adjustments, it's almost always after a major market objective has been taken out. That's usually the big one. Measured moves, that kind of thing. As an example, if we were measuring from the top to the bottom of that swing, we plot that over here. Actually, over here was the secondary push to the downside. This would be another example of if the market is pushing down into this area, I don't necessarily want to be a seller anymore. We're achieving major objectives. And if it starts reversing out of there, I potentially even have a reversal play. There's a million different ways to really go about it. But when the market's doing something that you don't expect it to do, that's when you have a really big clue, or when they're achieving a major market objective. Those two things almost always are the precursor to something changing, and they need to be paid attention to. Hopefully you found the video useful and interesting, and as always, if you have any questions, you can drop those in the comments below. Until the next video, though, I hope you enjoyed it. Rest up, and we will see you all then. Thanks.